evening to everyone, or late afternoon, depending where you look at it. It's 4:32 p.m., August 30th, and as you know, Monday we have Labor Day. So 2023, of course. So we're ending another great summer, and we did have the hurricane go by. Thank you all for your notes and text and emails. We're fine. Again, as I was mentioning earlier, our max Q, max dynamic pressure, was around about 2 o'clock, 1:30 to about 3. About 2:45, we heard the all clear sound, but somewhere in there, we were about 200 miles west. No, we were 200 miles east of the hurricane. So uh, I did venture out finally this afternoon just to see the streets and all that. You did see a little debris, but nothing fancy. Not as bad as up north. Yeah, you've probably seen those. So we're good. Our risk was really Peter Cook, our moderator. He's north of Tampa, so he's as 3 blocks from the beach. So the water didn't get to him, but was close. So anyhow, quickly housekeeping issues. First of all, this is a part of PMT package. Yes, we're sharing it openly with others, but that's good. We get feedback. I learn things. I understand but from a wide, bigger swath of those interested with market timing. So this all benefit. We do also link it on our page, on the PMT page, saying, "Hey, this is let's see. Okay, these links are added, so you can easily get in. You can see the videos. You could look at the archives and so forth. We had a typo. I apologize. First of all, this was just added in. It was lacking. We had not posted our change of bias, so we're trying to catch up. Apologize for that. On the archives, also, with Nancy and I will clean this up. We're actually going through a massive cleaning of websites. You see some days we've taken out, yeah. But on 28th, I think it was, we had a 22 in there, not 23. Our bad. Comment is the same. Comment is when we have it's called goldenrod. This color, the goldenrod background, is a message we have sent out. Okay, this is a message we sent out to all members as we got stopped out, and then of course we changed. We changed our bias here, so you know that no, hold on, currents. Okay, we changed our bias on the 16th. This was updated to reflect that. I'm sorry, we were still saying short. Yeah, as of like late July. No, I'm sorry. It was posted as of 15, the day before, or that we were going to go short. That was a plan. It's still short. Huh? What the hell? They're still saying. Hold on. I'm sorry. We got to fix this. I am sorry. This is ridiculous. What am I doing? 1 second. I think maybe because we had a little hit there. Apologize. Give me a second. We're gonna get this fixed. It's just the area where that is on the top. Damn it. You might as well see how we do it too. That's no biggie. I mean, let me bring it here. Okay. This should say we're flat. Yeah, it didn't mean short. Just that one word is off. Everything else is fine. Flat SPX. Okay. As of 4 on that. Right. So let me go to full screen there. And okay. Let me snap it, and then we're good. Sorry, that's embarrassing. We had a couple of errors there, and I undid myself. So I went in there, fixed it, and I created another error. I must have caused this myself. So let me get that. And then here's our stamp. Do you know when this was taken? Okay, save it. There we go. See, that was 3:30 this afternoon. So we're going to fix that. We're going to close this. Gone. And this is the wonderful world of publishing, right? So, who holds the umbrella for Captain Tico? First, it was Admiral. Second, he's got adjutant. Remember, they have a staff. When you become an admiral, you get a lot of freebies from the Navy. that courtesy of taxpayers. So, including some allowance for what do you call it? Some allowance for tomahawk steaks, of course, as an animal. Okay, we got this fixed. No, hold on. Why is it not fixed? Oh, I know why. Because this son of a gun is it's not as good as we want. Yeah, it's cached. Well, let's go to another browser. So it's not cached. Oh, jeez. That's a new thing they've added now. You have to, with the passports, you have to put in your thing. Okay, here's what I want to make sure we're good. It's 340 and it's flat SPX, right? Sorry about that. Even though we had the message, we had the wrong chart. Sorry about that, but I'm finicky for detail. Okay, so as I was saying, we caught up on those. Now we'll get to the charts in a second after we've gone through the econ calendar. Two more items. One, we added indicators addition to Happy Expert, our top of the line package, with, as you can see, color gradient. Okay, you see that, yeah. You can see the yellow and all that. This is a new technology that Trajan has had recently. I just got aware of it. We were using it for one of our tools for risk management, and this gives us kind of a the way we're using it there is to see by color what percentage of margin money we've already used. Okay, when this becomes a very very fast game, you cannot get surprised where placing an order and the machine says, or in this case, Trade Station Center says, "Oh, trade not accepted." Okay, that means that you were going over. So while we have a counter that show how many contracts we can go, what percentage we have, we also have a color now. So three ways it's reminding you because you're in the heat of the battle, and that's basically should be somewhere in here. You could see that there's a color there. You could see that, of course, this is on a sim right now, but you could see how many units I can trade. If I go to full margin, the chart for nighttime it changes, all good stuff. This below used to be, and still is, gamma ladder, and the top we add the risk management. So because of that, this becomes color. Right now it's all green. As this builds up, you get your margin usage goes up. Available units drop, the color also changes. So long story short, by doing that, it just an idea hit me. Why don't we put on 2 or 3 very popular, because it takes time, a little bit tricky, popular indicators where this kind of a tool is helpful. You can't use it for charts per se that are linear. What you need is really using it on histograms. Yeah, the effects really shows up. So we did that. That sent out until tomorrow night. We're still having a special of existing price. We have not changed the price in 4 years. So there's a little bit of inflation there and a bunch of new indicators added to the expert package. So that's one. That expires September 1st on Friday. Now, if you guys decide to come in on Monday or not Monday, but let's say over the weekend, that's fine. That's fine with me too. No biggie. Okay, we're not that finicky about space and time. I mean, yeah, space and time. Yeah, I've gone to what you call it, Oppenheimer too many times. Great movie. And so that's one. The other one is on Orb. Orb has been killing it. I mean, absolutely killed it. You could see. I don't know if I'm connected to you. I think you are. I am. So let me go here quickly. We sent the email out yesterday. I think some of you got it. Not sure if everybody got it, but here's was the PNL. Well, you could see 976, and there's 462 per contract times 3. So on 1386, it made 976. Here's the chart. Let's go through the chart. Here's also the chart you could see. So, and this is the end of a session, which is noon. So in 2.5 hours, made 70%. Is ORB back? Well, listen, ORB never went away. It's a market texture. Now we're getting, as we've discussed, market texture becomes more violent, and this is how this software needs. It needs volatility. It's a day trade, right? So it's not going to make money if we're going sideways. That's sausage. Nobody's going to make money. And the sweet spot of the market, if you look at seasonality, look, chapter 8 of my book is all about seasonality, not by me, but by Phil Erlanger, the head of the technical analysis for the Johnson family, who owns Fidelity. You got to read seasonality. You got to take that into account. It's like the last 30 years, overlay by month. And sure, the seasonality favors bigger moves starting about right after 9/11. You know, as we go to mid-September on to about 90 days, that's a rock and roll time. So the reason I'm saying all of this is this, that on Friday, tomorrow night, we're going to be issuing the code for month of, the ORB code for month of September. And as I promised, we're going to go back to 2 trades. We are limited during summertime to 1 trade because all the side effect, the sideways move, people may not have a stomach for 2 back-to-back losses, okay? In terms of being stopped out twice. So but we did a deliberate turning off of the second trade. It's just a flag. So we're going to turn it. There's no testing needed. It's there. We're going to turn it on tomorrow night. So tomorrow we still run with one system, with one what do you call it, trade, and that's, well, maybe we can change that. We'll see. The point is, the trade, the second trade is if the first trade is a loser. It wouldn't make a difference yesterday because there was the first trade and the winner. So even if we had the second trade on, it wouldn't kick in. Why? Right here, early profit. Let's see, how do I, there we go. That's early profit. Once the early profit hits, you can't have a losing day because everything else you got goes into BE and it's tracked that way. Good. Oh, and then they have 2 positive exits, DMZ, which we moved it to a first DMZ, not the second. And then end of time, EOS, end of session. So we can't lose. And this day was really nice, 976, so 70%. So that will go out tomorrow night for September. And of course, we'll have a minor change to our user guide. And of course, number changes to 945. We had it ready. We a lot of work on it in late July, but we did not deliberately send it out, and we stated so. So now it's going to come to reality. With that said, I don't have anything else on my my plate right now as far as housekeeping. Okay, that should cover us. So economic calendar. Let's go there because we want to get charts. Okay, as you know, the big day this week is gonna be not my regular sales. It's gonna be non-farm payroll. We're gonna get to that. And of course, you get a little PMI, and then ISM. And really, construction expenditure. So I think ISM is going to be far more important than anything else. Of course, number 1 is the non-farm payroll. ADP came in today, and we got 177. Expectation was 200. Remember, 2 months in a row, ADP just hit it out of the ballpark. Okay, and maybe we're going to pull back a little bit. Who knows? This data is very, very noisy month to month. That's why you got to look at the revisions more than anything else, and then look back really. So the reality of this time series is really we're 60 days behind, just the way things are. So, but that we're gonna look for that. GDP came in today, and again, this is the background data. You got to keep an eye on it. 2.4, 2.4. So they're expecting the same move. We dipped down a little bit, and 1.6, 1.7. Now, part of this is gas usage. Yeah, gas prices are still up. I topped the other night just as a safety, because I don't drive much, but you never know if there was shortage or not. I think they had enough reserves on hand, so people didn't panic. But still, I paid like $4.70. Is that what you're paying these days, Dennis? Somewhere in there? You know, of course, you live in a ritzy part of town. Maybe the gas is a little bit more expensive there, but that's what I paid. So about 460 ish. And you know, I see on my car. You're welcome. Um, so, but I think gas prices are still a little bit up. What else we have here that we want to look at? Inventories, wholesale. I don't care about those. Okay, what did this come in? We had pending home sales. I missed it today. Remember, I traded about 33 minutes today. 383 regular. I was saying that. Oh, 383. Oh, I see. I see. I'm paying. I paid, I think, 460 premium. Yeah, yeah. Wish I could use regular, but you know, I guess mine can't use it or whatever. I don't know. There's recommendation, don't touch it. Yeah. Okay, pending home sales 0.3, 0.4. Remember, rates have come down slightly. Consensus was negative and it came up strong. This is very strong compared to what the consensus was, and better than even the revision. 7. This too, yeah. Okay, hold on. That's pending home sales. Oh, excuse me. Let's see. There was one more item there that was important. Bill auction, no. Oh, mortgage apps. Yeah. Let's look at that quickly. Okay. Yeah, mortgage apps are a little bit upticking there. Yeah, the rates seem to have maybe topping off. I kind of don't think so, but we'll see. Not what I hope so, but I just don't think so. Yeah, this is a pretty good move in terms of mortgage apps. So there's more activity there. We'll get to charts in a second, but before we go there, okay. Before we go there, let's go to timer to our Econo Day. We want to look at this one, the big one, the big Kahuna. There we go. Okay. Now, I usually print this out, so I have it near me. I usually put a post up and say, "Hey, what do you guys think?" And so on and so forth. I'll do it later on. Big range, holy mackerel, big range. And they're thinking just a little downtick there. All right. Private payrolls. Ooh, okay. Wow. Look at this range. Holy mackerel. Okay. Manufacturing -2. Consensus +2. Okay. I like to look at average hourly earnings. It's very, average work week after. It's very, very boring, but any uptick is notable, even, you know, and usually it's a tenth of an hour. That's why I usually like to look at, of course, the top line. So, those of you who want to trade that who are in our chat room, reminder, come in an hour early, okay? Because the number comes out at 8:30. What's my guess here? Too early to tell. It's like betting at the Caesars. I like to see how the line moves into an hour before the game. So a little bit too early. I think we have a little downtick here. Yeah. So at first for a while, but don't hold me to it. I'm not an economist. I don't look at that data that closely. But here's what I want to get to quickly. Yeah, you could see front end is making new highs. These are 7-year limits. Okay, 7-year new highs every day almost. Okay, so we're really inverted. And we're selling off on the 5, on the 10, and the 30. Yeah, but no, don't forget the 30-year went to a new high in 7 years. I mean that was nasty. Here's your long-term insurance issues. This is housing, and this is cars. Now, two things to keep in mind of one, credit card are very high. This usage is very high. I post some charts on my Twitter at MZ Analytics, or maybe Admiral Tico followed up and retweeted it. It's very high where we are credit card usage. The other one is that 90-day delinquency of car loans. Those are high too. So to me, the economy is not as good as we thought, but it's close. So something is out of whack. Something is not correct there. Otherwise, people wouldn't be behind like that. So me, I'm purely in cash position. I'm just no debt, zero. I just can't handle it. And mentally, learned that from old Louis Porcelino on the floor of CME. You can have one loan. You know what that is? It's your house. What's the loan size? 50% LTV. And you don't go and refinance on this and that. Just if you refinance, no, I'm saying you can refinance, but no cash out. No cash out. You just want to bring your rate down. And you wonder why. If you can make 10%, 5%, 1% a day, just 5% is not sustainable, as you know. But let's say you can make 1% a day. That's 22% a month. A good trader in futures will definitely do that and then some. Okay, but let's make it very, very artificially low. 1%. The problem is, what if you take that money, do a cash out, and go and then lose it? Now you've added to your debt. Cars, no borrowing, pay cash. No lease, you pay cash. Why? You should not be under any obligation mentally because it impacts your trading. Remember, market has a very effective way of finding people with too much debt and clean their clock. The Chicago way, yes. So try to keep your debt down. So, all right, let's go to charts. We did talk about 50 bar, right? As we were here, we said we got to look at 50 bar. We went up, touched it, and they sold it like there's no tomorrow. Of course, yesterday it debunked all of that. So today's the first day that we pulled up, a little slowed down. We'll get to some more gradient here or granular look, but just as a first look, prima facie, I wanted to possibly get short. That's out of the window right now. So I maybe possibly get long for a small pop because I think now we're in the, because especially today, we're in that area of getting to go to the 4,600 test. So I got probably 100 points there, which is 10 handles on SPY. So I may do something like that, okay? But I may go in there early tomorrow morning. Yeah. I was earlier today, in the chat room, you probably heard, those of you who were there, that, I like to see if this thing closed lower. It's still going to go long, but at least close lower, pull back a little bit before this keeps on going in this madness. I mean, obviously, things were quiet until yesterday. Yesterday, a lot of things changed. So now the internals are not great, but at least they're a lot better where we were. We were at 90 level. Yeah, that's 100%, 150. So at 90 level on McClellan oscillator, breadth thrust has come up real fast. What happened here, what threw me off was this bar. It confused a lot of people. A lot of people did not like 50 bar and they sold it. So, but we have a CI cost now. See, over there in this mode, go back to this point. CI was flat to down, so not a spot to get in unless you have some buffer that you're willing to blow out and say, look, I'm going to leave a little buffer in the account. I may be wrong, tight stop, and I would go out. But it's definitely not the beginning of a trade. It's not signaling a trade. Today's a different story. So tomorrow morning, you may see an order from us. Okay, those of you who are members, yeah. And you see also there is a proof. Your second day in a row of CI diff being positive. Remember Rothschild? He says, I want to buy late and sell early. Are you with me? I want to buy late and sell early. Yeah. So, yes, thank you. Yes, Dennis. Yeah. As you know, I did, before I got into this, as a matter of fact, the reason I got into this is because real estate mortgages slowed down. I had extra time on my hands in LA back in the early 90s. I mean, early. Actually, when we went to first Gulf War, my XMI positions did so well, I had to take second. What do I do with mortgages if I can do this? And there were two automated systems. One would run a series of time series and say, what's your best guess on the XMI is? It was a very, very primitive AI. And then the other one was running with a package called Option View. I'm sorry. Option View, which was a mainstay of market makers at Cboe. And those are the guys who actually would price the option that they sell to you. Okay? Yeah. So you combine the two, you get a picture, and it says, here's what you should be doing, and here's which instrument you should be using. So we'd go to option chain and give you the specific calls or puts. They would all be do a spreads, calls, call spreads or put spreads, not both, just one of them, one at a time. And so, and then we hit the Gulf War, which was January 16th, the first one, with Schwarzkopf and Colin Powell. And I mean, the rest was history. So what am I doing? What are we doing here? I should be in the market, not this crap. Mortgages are always fighting over a quarter point. Forget it. I don't want to be in competition with anybody. I want to put proprietary work knowledge to work. So, my point being, I was doing some mortgages, something between about 3 or 4 years prior to that. And I would see that, Dennis. People would go and, oh, I can cash out. Well, yeah, if you cash out, you pay me more because I'm getting percentage of the asset, like a quarter percent. No, I'm saying 0.75% to like a 0.25 of it. Okay, more you cash out. But these guys would come in with, especially older folks. They really didn't realize how it could impact them, and they would borrow too much because there was a cash out. So then now they changed their LTV, changed their budget, and then 2 months later, I would get a call like, "Huh?" I said, "Listen, these are not neg amortization. I wouldn't give it to you, but still, you got to realize your payment is going to change. They showed it to you, and escrow is going to change. Well, we didn't think it's going to be that impact. Really? It's 30 years. What are you talking about? Of course, it's going to impact. So keep your debt low. This cash out is, I mean, unless the value of the house will ever increase, you're going to be in trouble. And at some point, you got to sell to pay the debts you've added to your debt. Okay, your main debt, the main mortgage. And as you know, in 2008, we proved, oh, that was a fallacy. So now real estate is just like another asset. It goes up and down. There's no way it's just going to go up. And now another problem we have is suitability. We've never had such a tough suitability index now. So less and less and less people are getting qualified, which means that the secondary, the first-time buyers are not coming in, so people are not upgrading. Yeah, we're gonna have a very interesting real estate moving forward. But that's what I read. I'm not an expert. Okay, equal weighted, we're right about 50 now. Interesting enough. Remember, this is not market cap anymore. There's a different, it's the same index, different value. So equal dollar across the names, rather. I mean, equal dollar, rather than market cap dollar, right? For the weights, yeah. Same thing with NDX. The symbols are different. You see that dollar sign SP. That's Sierra Papa 500 Echo Whiskey, and this one is November Delta X-Ray Echo. Okay, with a dollar sign in front of it because it's an index. So that's where we are, and this is a very cleaner move. It's already a third bar, maybe fourth. So this was classic. So now I haven't spent that much time with this, but I'm going to I plan to. Why? I want to see these live, and it's beginning to show it to me. Okay. I mean, look, I've been, if you go to our, here we go. Let's go to timer. Let's go to timer digest. Okay, take a look here. PMT Pro. We want to look at archives. You see that? We were there from 15, so that's what, 8 years ago. So there's no rush. The spark is always going to be there. SPX will always be there. Trust me. So there's a SPY and the calls and puts of it and so forth. So this kept becoming a little bit more interesting for me, not because I charted it, no, but I'm seeing it daily. I'm watching each bar being built daily. Okay, just like you guys watch the NQ or ES, 5-minute bars and each bar is built. That's how you learn. Why? It's the unknown that's going to teach you, not what's already on the chart. This is already history. You got to think about the next bar. Where's that going to be? And so look at how clean this is. Look how it moves in these channels. So you're going to probably see me more talk about this. All right, canaries. This is concept of canaries in the coal mine. These two are key areas, and we're just getting to punch through 50. You see why I hesitate to get long? Now, and remember, the shorts still could be played. So if we get long, our stop has to be super tight. Okay. And also September. Don't forget. Yeah, then a little bias into 9/11, but after that, September, you gotta be extra careful. Yeah. The trenders. I'm sorry, let me go back here. I don't want to be rushed to anybody. Anyway, but you could see, again, we're in that area. We have a cross there. So far, transportation says ES is going to go up, and Russell says NQ will go up. But again, we're at key pricing. Should I be taking a trade before non-farm payroll? I can see that question coming, by the way, tonight or something. Yeah. Yes, you can, but you got to be very moderate. I would probably go in half size with a tight stop. Depending how the number is, how we were like to say a noon Friday, then you can either put the other half in and maybe widen your stop. But we got to see how that number is. But you can't tell. If you happen to be right, it could be a nice return. Why? It's the unknown. The unknown pays you or ruins you. Once it's known, there's no pressure. Yeah, vol is sucked out, completely sucked out. So there's no gain or loss of any magnitude. Okay. All right. Excuse me, guys. Remember, I have 3 chat Zooms, and one of them I speak, but by this time of the day, I'm totally dried out of water. All right. Okay, let's do our count, as you know. 1. That's neutral. I'll put that 0. Negative. So 1. Well, for the same reason, that's neutral too. 1, 2, 1 dash 2 dash 1. So 1, 2, 1, 2, 2, 1, 3, 2, 1, 4, 2, 1, 5, 2, 1. So 5 up, 2 neutral, 1 down. Okay. We're not overbought yet, so we have a little bit of room. A little bit of room forward, yeah. Once we get a breakout, that's a different ball game. Yeah, you got to realize the value of breakouts. Some of you may be bored by all of this, but I'm as a system designer, you got to think about how the machine thinks. And a channel breakout is probably one of the most solid signals. Why? Well, you could listen to like Bill O'Neill, the original publisher of Investor Business Daily. How do we go to new prices? Somebody buys the highs. When we go high, we go up. Somebody buys the highs. Look at what they call it did. Tesla last few days. Somebody's buying out. Look at Nvidia. Good example is Nvidia. Somebody's buying out. So we're not there yet, but we got to be cautious. We're kind of a little bit late coming in, but we get cautious. Part of it is that all the noise we have there, all the back and forth. Look how many times it negated the bar before. So, and I promised, I said, I've been in a lot of pain here. The first drop I have, I've got to take at least a partial gain and step back. And I don't want to reverse. I'm not good at reversing. I'm good at stepping back, letting the dust settle, and then go back in. Again, you trade your style, I trade mine. So that's mine. Okay, quickly, weekly high and lows. We picked up a little bit here on the upside. Obviously, this bar had its mark. We knew from this, as discussed in previous webinars, we have a drop coming. And look at the divergence. We went to a new high, and look where we are here. Yeah, we're going to drop. We are going to drop, and we did. Is it big enough? No. Is it what we wanted? No, but this is summertime. We probably the rock and roll time is September sometime. So I'd say about a week and a half from now, we could be a totally different ball game. Why? Look what SV1 is doing. Look at Momo is doing. Momo is a faster, leaner, meaner brethren of SV1. So they set +1 sigma already. So we're getting close to that top. We just probably have a small couple of days play, or do nothing and wait and get the other side, the downside, which would be a nice M. 1, 2, 3, and boom, down. I could be completely wrong. Remember, opinions are a dime a dozen on eBay, but that's one scenario. Now, we're going a little bit too fast. Look at where VIX is. Look at that level is about 12, about 13. We're already at 14. 1388, that's 14. So we have 1 point more to go. And then I think we could be near a top. So you could see. SQ, we discussed that. Okay, there we go. Okay. Let me make sure it's refreshed. Yes. We're about here today, midday. Of course, this is after the close. It's perking up a little bit. It's not there yet. I need it to be in this mode where it's slowly rising, then do a peak and hits like 4 sigma. None of that is here yet. So SQ is worth watching. There's no actionable item here. Just it should be on your desktop, in your dashboard, whatever you want to call it. Easy, put it together. SQ is downloadable from TradeStation. I think other platforms probably have it too. Find the structure. It's the SPX out of the money put spreads or puts. Doesn't say put spread, but puts out of the money. So I'm sorry, not there. I'm sorry, here in this range. It's saying that the activity is beginning to pick up. The activity was going out. That means that as we were dropping, they were retiring it. This is the open positions, okay? On the SPX puts, again, SPX puts. And I think on our website, there's a little write-up about what these levels mean, what 142 is. Keep in mind, we have a shift here. We used to be 100 to 150, no longer works. Here's all-time low at 110.34 is all-time high, 170.55. So if you shift that, fair value is about 140. So we're a little bit over fair value, okay? The issue is, do we go to peak? If it starts going to peak, you know what's happened. The big boys are going out there, finding a few nuggets and buying puts on them. Month-end markup, yes, absolutely. Now here's the sign of an experienced trader. Dennis is asking us, month-end markup last few days. Well, I'd say, I mean, it's dangerous into non-farm. No time there, but usually you don't get first of a month on Friday. Okay, so, but yes, there's some that markup is going in, as the markup. This is what happens as you have that markup. What's happening with the price? Price is going up. What happens with price of puts? They drop. They have less value to get in. Okay, and if you were already long puts, you better get out. But if you want to initiate a position, you have less to put out, so it becomes enticing. As it goes higher, then you see a bunch coming in. Put that position on, and of course, went against everybody for a while. You got a couple of divergence, okay, and then bada bing, came back down. Question, yes, sir. Okay, yeah, good. Gary, do I have a choice? Here's the question. Which has a higher probability, SPX 3800 or 4000 for the remainder of 2023? Care to speculate? Yes. Well, let me make it a little bit more interesting. Do you care which order? That's one question. Which order? We're going to get the 3800 first or 4800? Any order. Oh, very, very clever. These Americans, very, very clever. Okay. Now you're way over my pay grade, Gary. But let me give it a try. Okay. Now read the disclaimer. Okay, I'm not that smart, so read the disclaimer. I think 3800 is a little bit deep. Okay. I would look at like 4100 area plus or minus, which is 400 points to about 4,000. From 4,000 4,100, I think that's going to come first. Then we're going to see 4,800 near Christmas. Why? Seasonality. I don't. At this point, between those two levels, nobody's got a crystal ball. If they do, don't walk, run. Nobody does. But seasonality says most likely the downside will come first, and then you get to where the market would puke. I mean, we'll just throw a baby with bathwater out from the 10th floor or whatever. No parachutes included. Yeah, exactly. And then once we get that, then the big boys will come and buy it out. When nobody wants it, they buy it out. And we are back to again seasonality of having a Christmas early, Christmas rally. Yeah. So Santa Claus rally into 4,800. I think we're going to see 4,800. I don't think that's out of question. Um, Look, four sigma is 4,600. 4,643, so another 200 points. I think you could see it. That's all-time high. Once we get that area around 3 to 4 sigma, that becomes a huge magnet. Right now, it's not doing anything. Okay, so if you want to buy, let's say 4,700s, probably not a bad idea as a call spread. 4,700s, yeah, because it's not going to take much money relatively, especially if you do a spread. Okay, same thing as down here. Remember, you're further away from at the money, your premiums drop, so you can play some games. You can even do both. You could do what the Admiral does often. Not Admiral Tico, Admiral Esposito. He's another Roman, but they get along. We want peaceful coexistence, exactly. But he would do often these out of the money spreads, long call, okay, from down here with a short call above it, or roughly, and same thing down here in the put. So if the market moves, and remember, you're not paying much. You're paying a little bit. It's out of the money. You got to watch your time, though. You can't go crazy on your time, because that's where it sucks in the dollars. But you got a spread. You hunt it for a good, reasonable combo. Yeah, on the top side, the same thing on the downside. As long as you're near neutral, you have an even chance of getting either of them. And as one starts moving, you dump the other one. You don't keep it forever. So, okay. Gary, that's what I see. But again, here's our problem. Markets are very efficient now. Why? Internet, online trading, and so forth. So you have a lot of also pressure from social media. These things can change any second. That's why we also have a lot of people losing money because of these movements back and forth, right? Sometimes you win if you hold on, okay? But if the pressure is too high, you get panicky, you dump it. Look what they did to me last Thursday. I mean, it was absolutely horrible. If I didn't win a little bit on Friday, I would have been a basket case the whole weekend. So I came in Friday saying, your objectives are limited, but one of them is you have to win today, even a small amount. I did a little bit better than that, so thank you. But that gives you a chance to recollect yourself, get your being on the right direction, and say, hey, one day doesn't make me or break me. Let's go back to what I'm good at and stick to that. I mean, I actually have a checklist. Yeah. Intraday checklist. Intraday checklist, yeah. Aside from all these other gizmos that are running in front of me, including, for example, you could see our liquidity analyzer that shows me where the orders are in terms of leniency, which way, instantaneously now, which is based on bid and ask, plus all my risk management. On top of that, you still have to have a checklist. You still have to say, okay, A and B and C happened. What do we got to do? I wish we had a higher reading here, but I think it's coming under the skew. Yeah. And then of course, the more this goes up, the more this things get ready. If you think about it, they almost look the same, except a little bit time shift. Okay. We go up when the market is going up. Why? The big money is buying the puts. Why? Because those puts are cheap. They're not going to buy it down here. That's where they're selling it to you. So two of my Roman friends, okay, call me and they say, we want to do what Mike Berry does. When? Here in this day. I said, over my dead body. Why? I said, you'll find out. So yesterday, one of them calls us, hey, me and my brother, we don't know how to thank you. We would have gone gung-ho here to buy some puts. I said, listen to Admiral Tico. You need to read Rumi and drink some tea. You decide at this time you want to buy the position that Michael, what's his name? Berry, not that size obviously, but that concept to put on. They'll probably put in like 20 grand each leg, but nothing like over $1 billion bet. I mean, and now he's getting his ass cleaned up. I mean, Look, his clock cleaned up here, big time, obviously. But these guys have holding power. Yeah, he is not all in. He's got some, but he's got a lot more behind it. Maybe they're looking for M. I just don't know. Obviously, seasonality is in their favor. I mean, this market is not going to be this calm. I know we rallied up. I know it was a big day yesterday, but it was relatively calm. I'm talking about this sort of thing. I'm talking about this, okay? Where you're going to say, when the hell this thing is going to end? We don't know. Nobody knows. Imagine going through 5 sessions in a row that you open at top and close at the bottom. You're going to freak out. So that's what Burry has in his favor. By the way, for that, I think this is Thursday, right? I think this is Thursday. Yeah, Thursday before expiration. Expiration was 18th. No. That's the. No, I'm sorry. The call was this time. The call was on Thursday, on the 16th. 17 is the. Am I saying this right? Hold on. No. I'm right. I was right originally. 17. This is 17 on this day. Okay. Now, and this was expiration. Then we changed. Boom. By the weekend, one of them said, "I think I'm glad we didn't do it." Of course, now look where it is. But remember, there was also a question about Barry that why did he disclose that filing requirement? It's not that he wanted to; he had to. Above certain number of contracts, you have to disclose. So, okay, SP2. Let's refresh here. 7425. You know, Admiral Tico posts his charts now, and pre-adamant about it. There we go. If you don't know Tico, then you may want to try to follow him. 1 second. Yeah, remember we salute the rank, not the man. Okay, so all he demands from you is respect. That's all. But look, his numbers are growing every moment. Okay, midday we're doing some charts, and I'm the poor soul who sits there and try to put the stuff in. This is the chart that Deemer talks about, and you could see this is the problem to me. Twice trying to get to 90% back to back. This would have been one hell of a structure if that had worked. We didn't do that. But these are 30 minutes. So Admiral posts those, and then we do a variety of other chores. This was I don't know what I had there. I had something there for. But here's a Momo, and this is a number you want to look at. We're gonna get to it in a second. And here's a SP2, probably one of our crown jewels. Now, this was not near the close. That's what we got a little bit higher on the close. And remember, reminder again: what matters is end of the day. What matters, and then 3 months spread. So let's go to these charts in real time. 0.253. Okay, negative. Let's say 3.5, maybe -4. That's the top. Somewhere in that area, the top. When it gets 0, that's the bottom. And we got awfully close, especially here, this level. So 43, back on 18. Remember, we closed the day before. So yeah, you cannot pick the tops and bottoms. Nobody can. It's luck. 74 here, so we're getting to overbought. We could be there. We could also be there on Friday, given the number. Tomorrow could be absolute boring sideways ahead of the number, not counting obviously exogenous news, because nobody can predict that stuff we don't have in a news cycle. Not about economic news, but I'm talking about politics, I'm talking about war and peace, whatever, that kind of crap. That's going to change the picture. But for now, we're beginning to just get to the edge to become in the overbought condition. And you're never going to see 100. Somewhere around 90, that's way overbought. Anything above 80, yeah, I would want to be near a short. Okay, rendezvous point complete. Beautiful. Look at that. And this was a flush. Why? You got rendezvous point down here, okay, near 0. And look what SP2 went to. SP2 was 6. No, hold on. SP2 was 16. Yeah, that's what. Yeah, 16.7 and 16.6. Yeah, actually it dipped down a little bit lower. Okay, as we went up. That's a divergence. So that was a good run. Yeah, my best days here has been the what do you call it? Has been uh, the long side, obviously. Yeah, 24, 24, which was this day, I believe. That's 24, right? Yeah, yeah. This was a tough one. Because of the run up, my own bias killed me. I just stepped away. I just said this is nuts. Yeah, and then one big short next day, and then long since then. Yeah, I've had 3 or 4 days of no shorts. Okay, we talked about treasuries again. 7-year high and lows in front of us. Actually, we don't have a low. I don't know what the low is going to be. It doesn't matter. Um, but you could see what's really crucial is this part of the ball game. This one, okay. I mean, we have been here. No, in years and years we haven't been here. So Chairman Powell has some plans for us. Very inverted yield. And of course, number today being a little soft, we pulled back. Big drop yesterday. Big drop yesterday in the 5, which is cars, 10, which is houses. Remember, this is the two parts of the economy. It's not anything else. It's Detroit and it's major real estate operations. Both are basically needed. Basics of life here. Okay, Larry's up and down volume again. Disappointed here. Could not get over 90%. Aside from that, there's no signal here. Now, Russell went nuts yesterday, but again, not a follow through. But Russell's probably the closest to 90%. So remember, rates are coming down. These guys are big consumers of debt as a company level. All right, this I talked. Listen, this I looked at. If you're coming here early, because ours finish our market was at 4. We put this at 4:30. Sometimes I'm here at like 4:15, 4:10. Something, and I was checking the headsets and all that. And so I sneaked into the charts. I said, "You guys would think I'm some idiot who keeps on coming in without looking at the charts. Believe me, I do during the day. But I'm also being honest and true with you, saying I haven't looked at the chart since the close. Why? Market timing is based on close. It's not really intraday. Remember, there's some data that comes in. Let's say advanced decline. They're coming from the plant. This is too detailed, I know, but you got to pay attention to the detail. The plant data is behind. Okay, it's not the exchange. The exchange won't handle it. So you could have it. You're on TD Ameritrade. You're on Fidelity. You and I will have different data. Okay, that means our charts are going to be slightly different. What matters is the close. So if you want to look at what you're up to, you want to look at the close. And of course, this doesn't have. It's actually been a close now, after 5, right? So you could see we're long here first and immediately reversed. Very fast, very efficient. Short here, very nicely short, but it's still holding short. Has not gotten the criteria for long to get long. Short again, long on Russell, and long here. So we gotta get long. This does bother me, but it is what it is. I can't change the charts. You got 2 shorts, 2 long, but these usually lead, so we're ready to go long. Let's see. Anything else I want to look at? Again, this is Tesla. Yeah. Yep. Yeah, it was around. Was it around here? Yeah, it was. I forget where it was. Somewhere in this area. We wanted to sell some puts, and one of the guys, one of my buddies, he hesitated. Back and forth. He says, "I'll call you back." I said, "This is your account. You decide." Yeah, you could do whatever you want, but I think a little bit of heat you may take, but selling some puts here would not be bad. Of course, the news on Tesla was not good in general. You know, the problems with the fact that they're just turning dollars, and you know, the sales are question, and they're selling with the lower prices. You know, the incentive is price cutting. Those are all bad signs. I agree. But the chart said we should turn around and go up, and we had a cross in it CI, right? So I said to one of my buddies, I said, you have some Tesla? He goes, yeah. I said, do you want to take some more? He goes, yeah, I would. I said, well, then let's sell some puts. And he hesitated. And now he says, why did it go up so much? I said, well, it didn't really go up until yesterday. But these are daily noises. That's not. Supply and demand. Sometimes you get too many shorts there, and they're going to blow them out. So let's see. One more chart. Then I think I'm done on my end. I will take your questions. Okay. All right. Hello. You guys remember? This thing's unreal, right? Let's go to 5-year so we get a little bit more perspective there. You know my line in the sand. That's not changing. 45 to 55. Look where it turned at 50. And that's a perspective of 5 years ago to now. You have the 2018 government shutdown. You got the COVID. And of course, we have this is the year that says this is the Fed. So you had shutdown of a government, okay, COVID, and the Fed. So boom, 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 and we pulled up at 50. So now we're coming back to some life. Prior to that, we always said, watch to see if we can take this last high out. It didn't, and we came back down and hit 50. Thank God we didn't go below 45. I would have been pretty scared going down below that, because then the whole thesis for the upside is no good, and we covered too early on the shorts we had. That's okay. Sometimes in your trades, you got to go in there and say, hey, here's the example. You know, I'm uncomfortable. I've sat there too long. So why don't I take a breather? These markets will always be there. As Admiral Esposito reminds me, they ring the market at 8:30 every morning. Look what we did. So I took a loss here. But look at the gains we have. So, and I'm going to go back in. I'm going to knock that one out of the ballpark too. That 3%, it's going to be mine in about a month or so. Net. Yeah, remember, it's a delta between your move and the S&P move. It's not the S&P itself. It's what that does and how much you're ahead of it. And along the bias, obviously. So if it's short, and SPX has to drop for you to, and then you have to add to it. If SPX goes up and you're short, well, you're in deep trouble. Yeah. But that simulates what the Time Digest ranks us. That whole Excel sheet is built to make sure we're in sync with them. We can catch their errors. We did catch one of them. Not that they have a lot of errors. No, in the 5-6 years we have that chart, no more than that. 2015 to now. Yeah, 2015 to now, or January 15 to now. So that's 8 years plus. We found one mistake from them, but there should be zero. But it's possible. There's 120 market timers there. You know how many market calls they have? Yeah, it happened. But that chart saved us. Because basically, we want to be in line with them, and the logic is also based on. Let me explain that. This is important for especially newbies with timer chart, with Timer Digest. I mean, a market timing. Let me go here. There we go. So I want to be clear. This is not pure S&P. It's parts of S&P. Which parts? The parts we're active. So if we go flat, S&P will stay here. Okay, that's the anchor. As we put another position on off of here, let's say week forward or whatever, this may go sideways and then it start up or down. This is based on while we have a position. If we're flat, there's no change. A lot of you, it just sits there. Now, what's the risk? Others can catch up. Yeah, if you sit sideways, the other one could catch up. So, yes, my bias to the downside usually wins. Yeah, look at that. Yeah. So my goal is, and that's a geometric problem in terms of math. So my goal is try to keep up on the upside. As long as I keep up on the upside, I'll make my money on the downside. Why is that? Because this is buy and hold only. This is the whole key, buy and hold. or better yet, buy and hope, because that's where the 95% of the market is. 60 no 52, 53% of U.S. households are in the market in some shape or form. The other ones don't have the money to be in the market. But if you and they're in it for long term, they're not doing what you and I do. But so our perspective is, how do we beat them? What's that spread? And remember, at some point that spread was huge for us. Gave some away. Yeah. Over trading, no. But the problem is, if you don't trade some amount, you leave the risk of other market timers getting close to you, and I don't like that. I don't want anybody close. I'm like my dad. He was a fighter pilot. He didn't like anybody getting close. You would get too close to him, he would turn around and send you a missile, and you're done. That's the personality. Okay, I talked too much. My apologies. It's 5:32. Any questions for me? By the way, there was a talk we may not have a webinar today. Well, I thought that yesterday too, but the weather was on our side. We have it next week. Would be next week would be 6. That's fine. Remember, 4th is the Labor Day, so 6 is fine. Yeah, definitely have one next week. And also, if you're new with us, remember, you need to sign up once. Okay, all we do, and all of our webinars are posted on our website, and you don't need to log in to see it. You just go here and home. You hit members. Just hit members, and it tells you all of them are coming up. So this will change to September 6th. Register once, because it reminds you and gives you updates. Yeah, you don't need to go every week to register. And it's good for about a year. I think that's all they allow us. After 52 issues, they cancel it and restart. That's why we capture the data, put it aside, so that whenever we can no longer grab it, the data is there, but they won't. They'll change. They kill the link. So we create a new link, send the email out, and say, guys, you got to re-register. I'm sorry, all of you. And it builds up again. So, okay. Have a great Labor Day. Easy on tomahawks. Yes. Can't tell that's Admiral Tico. He deserves it. But for me, a little piece of what do you call it? Ribeye would do. So, and lots of corn. I love corn. Anything else, guys? Anything I need to know? Again, if you're new with us, remember, be on alert for tomorrow on PMT. We should put a trade out. Yeah, we'll see. Early on, I'll probably kind of put it together on paper tonight, and then I'm trying to come in more and more prepared as much as I can, and then come in, and then I can easy to release it. All right. Thank you so much. This closes. I'm closing our webinar here, and then we're going to go into post-processing. Probably take 15, 20 minutes, and then we upload to YouTube. And the YouTube can be found again. I see a few new faces, or new names. So I'm going to say that right here, YouTube channel. You click there, and you can see they're added up there. And we have a lot of webinars over the years. This goes back to, I think, 2007. So I didn't know that we have over 1,000 videos. Holy mackerel, yeah. Anyhow, it goes there. So have a great weekend. We'll see you guys. Thanks, Dennis. Good night now. Hey, Nancy, thank you so much for all you do. Appreciate that. And of course, Cash, you too. Thank you.